Stocks falling right now, though we are off the lows after this morning's rougher GDP read and new PCE inflation data coming in unchanged. Let's get to Steve Leisman with more on overall how the economy's fared under President Trump's first 100 days, Steve, and whether he owns it or whether Biden owns it, as there's been some discussion this morning.
Well, the inflation numbers, Sarah, are the one bright spot in the first 100 days, but the rest of the data are pretty dismal, with historic drops in consumer sentiment and downgrades to the forecast. And I would say President Trump owns those downgrades. But forecasts and feelings are not facts. The question is whether the president himself can avoid the fate that economists have penciled in. Among the starkest numbers, the plunge in consumer expectations is the third sharpest three-month decline in the 50-year history of the Conference Board. The other two, you can see the biggest three-month fall came just after the 1990 recession began, and the next largest came just before the 2001 recession. So this one ranks pretty historically as a huge drop. Real spending was weak in January and February, but it was strong in March, and that could be because consumers pulled forward spending ahead of tariff price hikes. You had a big jump, for example, in auto purchases. The first 100 days also showed a dramatic decline in the growth outlook. The first quarter had been expected to be around trend at 2.1. It came in this morning minus 0.3 for a lot of reasons we can discuss. A second quarter bounce back, largely which would be the reversal of the import tariff front running. That's forecast to give way to two lackluster quarters in the back half of the year. At the same time, jobless claims, they've remained low. March saw strong job growth, perhaps as employers tried to hold on to workers that were so hard to find after the pandemic. That could change in the months ahead because you have all the government layoffs and you have firings that will be linked to the new tariff regime. Well, we keep hearing reports of businesses being frozen, so it looks like any turnaround is going to need a pretty big assist from a change and a clarification in tariff policy that would lead to a rebound in business and consumer sentiment that would get those, what do you call them, animal spirits going again.
Yeah, I mean, on the GDP, I was mentioning earlier, like the trade figure, that 40% surge in imports, big subtraction on GDP. There were all sorts of wacky factors, inventories, stockpiling from businesses on equipment. What do you make of what it tells us about the underlying demand as far as what we can expect next?
So what's expected at the moment is that the consumption numbers and the import numbers flip. Now, we should have a chart on this, Sarah, that looks at all the different contributions to GDP. You can see the negative 4.8%. That was net exports. That's the surge of imports that came in. Some of that ended up in the inventory number, but not all of it. Some of it could be in bonded warehouses where it's not inventories and it's not it's not imports. Fixed investment was pretty good. Spending was okay, and the government was down as well. So what is expected to happen is that spending number is supposed to come down, but the import number will also help a little bit. That's why you have that 1.6% bounce back in the second quarter. And unfortunately, it's not till the third or fourth that we get a real read on the economy, and that's where it's expected to be down below 1%. Again, unless there's a change in the tariff regime that could ignite those animal spirits that accompanied President Trump's election. And that's why, Sarah, I do think it's more on President Trump than Biden because of the fact that there was this huge surge of optimism that came in December, and then it started to trail off in January and February and again in March, where we now have these historic declines in both business and consumer sentiment.
Finally, Steve, how much weight is ADP getting these days, and has it really moved consensus for Friday?
I don't know yet, Carl. I'm going to wait a little bit to see, and I will report back to you. I'll send you an email, Carl, if you want. I haven't seen much in the way people are of two religions when it comes to ADP. They ignore it or they follow it very, very closely. I follow it. I think it's a good.
Like too much,
well,
right?
Here's the thing. I'll give you the data on this. It has been plus or minus. Where is my spreadsheet on this? Plus or minus 67,000 on an absolute difference. But over the course of the year, it's running about 300,000 over. That's about 26,000 a month. So it's close. And by the way, you guys, you both know that the government data ain't that good either because of the lack of survey response. It takes the government a couple months to get it right. So I think it's an indication for what's happening in the private sector, but it's not the Bible, speaking of religion.
I do wonder also just on this market comeback. We're down 500. We've recovered a few hundred points. We're off the lows. I mean, we're still selling off. But I do wonder, Steve, the March PCE came in more benign, maybe, especially after we looked at that quarterly PCE deflator and wondered, oh, what's happening with inflation? That I think psychologically is important, right? That we didn't see a surge in March inflation going into the tariffs.
That would be a problem on top of a problem, and we don't have that initial problem. We're going to have the second round effect of this. And I can tell you from our rapid update that we did to update the forecast going in, the bad month for PCE, Sarah, is going to be, the bad quarter is going to be next quarter. We see core PCE from our 10 forecasters going from 2.9 up to 3.5% next quarter. That's the surge, and it stays there for a couple quarters. So these tariffs have to work through the system, and then they come back down. I'm sorry I don't have a chart for you available, but the forecast is that you get about a percentage point impact on PCE or core PCE from these tariffs, and then they work off. So you tell me when you think the Fed ought to cut to address the weakness in the economy. That's where I think it gets very, very tricky.
Steve, you've outdone yourself today. You had a lot
of
to deal with.
spreadsheets at your fingertips.
Yeah, and
that was
great
impressive.
stuff on Squawk. Appreciate it as always.
I got all this stuff right here, right here.
Yeah, that's good.